As they say, it's better to give than receive, and that's what a lot of people will be doing today on this Giving Tuesday. Plus, you can score a tax break on your donation. Joining us this morning with some tips is tax attorney Adam Brewer. Good morning, Adam. How are you doing this morning?
Oh, good morning, Ross. Very well. Thank you.
Now, first off, what can you tell us about people making a donation today as well as through the end of the year and the tax benefits that they can receive?
Okay. Yeah. So if there's one thing that I could stress today, is really that the tax benefits are only available for the most part to taxpayers that itemize their deductions. So that's they use a Schedule A with their federal tax return. And those taxpayers that give to a qualified organization. So when you think about qualified organizations, that's, universities, religious organizations, charitable organizations, things like that. It wouldn't be, for instance, a GoFundMe. So those are the 2 points: itemized deductions and qualified organizations.
So say I go down to the Salvation Army or the Red Cross, what type of documentation do you need to claim that donation?
Yeah, so it's always to your benefit to ask for a receipt. So if I'm representing someone at an audit, say before the IRS or Department of Taxation, in an ideal world, we have a receipt that says, here's the organization's name, their address, their employer identification number, and then it identifies how much you donated and the date that you made that donation. So if we have a receipt with that information, we're golden.
Let me ask you this, Adam. Are there any benefits to giving from different accounts?
Yeah, absolutely. So some taxpayers, those that are 70 and a half years and older, they're able to donate through what's called a qualified charitable distribution. And that's a distribution that comes right from their IRA account. So the money doesn't actually hit their bank account. It's arranged through the custodian of their IRA account and goes right to the charitable organization. The benefit of that is, one, it has a much higher limit, so up to $100,000 per person, 70 and a half years and older. The other benefit is for those taxpayers that are 72 and over, they may have what's called a minimum distribution that they have to make every year. And so that qualified charitable distribution will count towards that.
And finally, Adam, since we're heading towards the end of the year, I know a lot of people need to kind of figure out their taxes to try and get whatever benefits as well as save some money. What's your advice to all of our viewers this morning?
Yeah, so my advice is, giving some money today is a great way to do that. But what I hate to see from my own clients is when they bring me these documents and they say, hey, here's all my charitable contributions I made, with the expectation that there's going to be a lot of tax savings. And sometimes it's not there. They use the standard deduction, and so we can't use it. And so that's not to say don't give money today, but that's to say if you plan on writing a big check or making a big contribution between now and the end of the year, talk to your tax professional, talk to your financial advisor, and just make sure that we can use that to your advantage from a tax perspective.
All right, Adam, some great tips there. Thank you so much for joining us, and you have a great day.
You as well. Thank you.